In today's video, we're going to discuss managing risk, which is one of those things that many traders say that they focus on risk and they manage their risk. And I would argue 95% just give it complete lip service. And that's a sad travesty, if you will. Managing risk is probably the most important aspect of trading, and yet it is probably the most overlooked aspect of trading. And again, so many people say that they manage risk, but when we go through these next five bullet items, which are just some of them, I'm going to argue that 95% of traders don't do any of it. So, with that said, let's just take a look at some of these kind of key. First of all, it is the biggest reason that traders fail. If I could give it an analogy, I like to use football as an analogy when it comes to trading in the sense of an offense and a defense. When markets are in your favor in terms of your strategy is working, it's anybody can make money. It's really holding on to that money, which is the challenge. So the example I use with football, the analogy with football is that a good defense is what people arguably will say wins Super Bowls or wins games. A good defense keeps you in the game, if you will. They minimize the damage. So managing risk, essentially, we're all going to go through periods where where strategies aren't working, we're just losing money, and managing that risk is so important so that you don't get and put yourself in this rabbit hole that you can't dig yourself out of. And essentially, I guess the biggest thing to look at it is your capital is your inventory. Once you are out of your capital, you can have the best trading strategy and systems in the world. You can't trade. It's as simple as that. So you have to protect the house, if you will, if I can use I guess, one more football analogy. Um, Second one is know your targets before entry. It's it's really easy for people to look at a chart and say, wow, and get excited, like, wow, this is going to pop and I can't wait. In a chat group of people are saying that, this is going to be awesome. You put that trade on, you walk away from it because you're so excited about the money that you think you're going to make. And then all of a sudden, maybe that profit target is hit and you don't know what to do. Do I raise it? I don't want to, leave money on the table. Or if a trade goes against you, you start moving a stop lower and lower and lower. So once you get in a position, even before you put that position on, you better know what your targets are, where you want to take profits and where you want to take your losses. So that's critical, critical, critical. You can't decide it once the trade goes on. You need to know it before. Essentially, you need to know what your risk reward ratio is. And to do that, before you put the trade on, you need to know those targets. Don't get emotionally attached to a trade. It's really easy to get emotional about a trade. And probably the biggest is when a trade starts to go against you, and all of a sudden I've heard so many people say, like, oh, I can't afford to get out of the trade now, and which I can't even comprehend what that means. I understand what they're trying to say, that there's such a big loss, I can't take this loss. Big losses can get even bigger. A lot of times people think, like, if a market's pulling back, that this is it, I'm going to add more to the position because it can't go any lower. It can go lower, odds are it will go lower. So you can't get emotionally attached to a trade. A trade is just one timestamp in a career. There's thousands of trades. It depends on your strategy. There's a lot of trades is the point. One trade's not going to define anything. So you can't get emotionally attached to just one trade. Um, Kind of on the lines of being with the emotional side of it, is a loss is not a reflection of your ability. It's just the reality of trading. So trading is a business. Treat it as a business. I've owned a retail store for 12 years, and there were days where I had negative days. I actually opened, I think I only had a couple, so just to be fair, but I had days where I had, like, almost no sales. It's just part of business. So trading, and a loss in trading is just part of business. Accept it. It's an expense and move on from it. It's not a reflection, especially when you go through a period where you're in a drawdown. It's really easy to start to feel incompetent, and your emotional capital, which is just almost as important as your physical capital, your emotional capital starts to get drawn down as well. And that's when it becomes really dangerous, because you start to doubt yourself, you start to doubt your approach, and you don't want to be changing your strategy unless there's a specific reason that you should change it. So it's not a loss is part of the business. It's not a reflection of your ability. And I don't have the stats in front of me, but there's data shows that a loss is actually harder on people than it's harder on people than the joy of a win. So people take loss very, very difficult, and you have to in this business separate yourself from the trade and know that a loss is not a reflection on you. It's just, if you keep stacking these things up, then sure, maybe you're doing something wrong, or maybe your approach is wrong. But if you're getting these random losses, it's not a reflection on your ability. Or if you're going through a downturn, drawdown, excuse me, that's just a natural part of the business. And finally, I can't emphasize this enough. Managing risk is more important than entry. People love to think of the glory of strategies that have high win rates, and entry is everything. People love to look at charts and draw trend lines and technical tools and all these different things to look at entry. And the entry is only part of it. I mean, you can take a bad trade and manage it into a good trade. So even if you have a win, um, a lot of times wins are just luck. Or if you have a loss can actually be a good trade. Things went against you. But the point of the whole thing is that you know entry is just part of it. Once that trade goes on, then that's a whole other part of managing that trade, not getting emotionally attached, managing risk, position sizing, not putting too much risk on a given trade. People may risk 10, 15, 20% of their capital. I've been there. I understand it. But you can't do stuff like that because because you're a trade away from being done. So managing risk is so important. Don't give it lip service. I beg of you. Focus on it. It should be the most important thing, more important than entry. So those are just 5 of the things. There's tons more. Those kind of summarize the basis of managing risk. So with that said, may you manage your risk well, and happy trading. And I thank you for listening. Have a good day.